We are just waiting for the attendees to spool in. We're just starting the webinar a few seconds early so that we can get going on time. Well, good morning, good afternoon, good evening, wherever you are. I noticed that we have participants registering for this event, really from everywhere, from the United States through to China, including India. So we have a very broad audience for this, and I appreciate some of you will be staying up late or getting up very early to participate in this event. Indirect taxation stalks the provision of services in Europe. It was one of the founding issues of ETOA. It's why we were set up over 30 years ago. And it has an ability to impact demand. It shapes how services are distributed, and it can be a defining and really disastrously complex problems for businesses. I think it's under discussed and widely misunderstood, and I think I'm really genuinely happy to be joined today by David Bennett from Elman and Bart, who's Director of Indirect Taxation from the Expedia Group, to look at the topic of today's discussion, which are the proposals by the Commission to tax services, or specifically tourism services, that are distributed online, with a specific aim of trying to create a level playing field, always a dangerous goal, to create a level playing field between those services which are taxed and those services which are being sold by untaxed individuals, such as private accommodation. Now, the process that they're going through is they haven't formally published any formal proposal yet. That is currently being drafted. But they've had a number of meetings and they've published some documents. And I'm actually delighted to hand over to David Bennett to give us a quick introduction onto the state of play. So David, can I hand over to you?
Indeed, thank you, Tom. Let's just get this.
Oh, I might just interrupt and say there's going to be plenty of scope to pose questions, but you have to pose those in the chat line that you should see in the corner of your screen. Over to David. Thanks a lot.
Okay, thanks again, Tom, and good afternoon, everybody. Okay, so as Tom just said, my intention now for the first 12, 15 minutes or so is to really try to give you a flavour of what the Commission is looking to achieve. There are quite a lot of complex, detailed issues. I don't intend to go into that level of detail during this introduction, but there will be plenty of opportunity to explore some of the more complex issues once I finish this presentation. Tom has already mentioned that there's no formal proposals in this area yet. So everything really that we're saying today is our interpretation of what we think the likely outcome of this process is. There are lots of minutes publicly available of meetings of the VAT expert group and the group on the future of VAT. I've mentioned a couple of those documents, both minutes effectively of discussions of the group on the future of VAT. You should, if you just Google those reference numbers, be able to find the documents themselves. I believe Tom is also going to post the links to the documents through the chat function as we go on.
I just have done so, David.
Okay, brilliant. Thank you.
This is live TV, so to speak.
Before we get on to the VAT position specifically, I just want to mention the OECD and also a piece of European legislation commonly known as DAC 7. The OECD several years ago now looked at the rules that might be applied to platforms in terms of the reporting obligations of those platforms. DAC 7 is the EU implementation of those guidelines, and it comes into effect on the 1st of January 2023, so only some 7.5 months away. And it will impose obligations on platforms, EU and non-EU, to provide due diligence information on the entities selling goods and services, certain types of goods and services anyway, on the platform, and also to provide to the member states transactional detail. We will probably come on to the point in more detail later, but there is a school of thought that says actually what the Commission is proposing for VAT, as we will come on to in a moment, is not really necessary because DAC 7 should provide the information that the member states require. But anyway, more on that I think to come. What we're really concerned with today is work that the Commission has been doing under the name of VAT in the digital age. Now, there are 3 parts to this. Consideration of the harmonization of member states' digital reporting requirements, including e-invoicing. And then the 3rd point on the current slide, simplifying compliance for both EU and non-EU suppliers in the form of a single EU VAT registration. So not multiple registrations, but the ability to report VAT due across the whole EU via a single means. Very similar to those who are familiar with the one-stop shop to that idea, and it may simply turn out to be an extension of the OSS. I don't really want to say much, if anything, on items 1 and 3 there, but to focus on the likely proposals for the platform economy, and in particular what we think is a likely move by the Commission to introduce a deemed supply model under which a platform becomes responsible for the payment of VAT effectively on behalf of the individuals, whether businesses or not, providing services on the platform. Now, much more on that, but that's essentially what we will be looking at. There is, we understand, a very detailed study completed recently by a firm of economic consultants, Economisti Associati, which we understand will be published later on this year, but certainly hasn't been yet. The Commission has also recently concluded a public consultation last week, and we will come on to what we might be able to do in this area, I think, in much more detail. We still understand that the opportunity to comment on the Commission's ideas, etc., is possible. In terms of timescales, the most recent Commission publication on this suggests that the implementation of this could be in 2025, but it's certainly not a fixed date at this stage. Let's start with the basic, but clearly very important question of what is a platform. There's no formal definition, but I've produced 2 definitions used in the documentation that we've seen so far. I'll give you a moment to just read that relatively short definition, then we'll move on to a slightly more complex one. Okay, so that, I think, not a formal one, but it is a working definition that the group on the future of VAT used in one of their meetings. And I think the main thing to take from that is that it's potentially a very wide meaning. Here's a rather more detailed definition. This appeared in the questionnaire, which was a part of the recent Commission's consultation. So again, I'll just give you a moment to read that. Okay, so again, hopefully you've had a chance to digest that. Again, it appears a pretty wide definition, and we will come on during the discussion part later to some comments about the type of platform which is likely to be affected by this. Now, an important point is that we think the new rules will only apply where the platform does not act in its own name. Many travel websites, tour operators, etc., do act in their own name, which brings TOMS into play. These platform rules are designed to apply only when the platform doesn't act in its own name. So, in other words, it acts as a disclosed agent. It is not the supplier of the service in question, but it facilitates somebody else's supply via the platform. Given that, and given the definitions we just looked at, it does seem to me highly probable that online travel agents, bed banks, even TMCs could be a platform for this purpose, but always subject to the proviso that they do not sell in their own name. And crucially important, and this is really picking up Tom's comment, this is this whole area is an attempt to equalize treatment between EU and non-EU, and the platform rules are in no way limited to those established within the EU. The obligations will we expect, excuse me, will we believe apply equally to platforms located outside of the EU.
Sorry, David, can I just interrupt you a second there? Just go back to the previous slide. I just want to clarify, when it's not limited to platforms in the EU, but only when those platforms are selling EU product. Am I right in thinking that? Yeah, okay, fine.
Yeah, we will come on in a moment to the type of services that are likely to be caught, but yes, it's got to be a service which is taxable within the EU. So I mentioned that we think the preferred model is the deemed supplier model. This tackles the non-taxation of certain supplies by making the platform responsible to pay the VAT. Various questions exist over what that actually means in practice, how the VAT will be calculated, etc., which we will come on to. But the essential basic premise here is that the platform itself, even though it is not the supplier of the services in question, becomes responsible for the payment of the VAT. Where the person providing the services online is already VAT registered and VAT is being paid, then the platform rules do not apply. So obviously, you could have a situation where a platform is facilitating sales by both VAT registered and unregistered suppliers. So at a basic level, the platform would need to understand the status of those selling on the platform. And again, the deemed supply model would apply equally to EU and non-EU platforms. In more detail, and again, I must emphasize, there's no proposal that this will be the situation, but reading through the GFV documents, I think we can crystallize the types of providers for which a platform would have a VAT payment responsibility into the following headings. Firstly, a non-EU person, whether that person is a business or a private individual, who does not have a VAT number in the member state in which the service is subject to VAT. Secondly, an EU established but non-taxable person. So a non-taxable person is a person who is not conducting an economic activity or a business activity. And then the so-called group of four. That's the name used in the formal paperwork so far to describe people falling into those 4 subheadings. So taxable persons or businesses which cannot recover input VAT, a person within the flat rate scheme for farmers, which may seem an odd one, but it may well, for example, pick up agri-turismo, things like that. Most importantly, perhaps in this subsection, a person subject to the SME, the small and medium-sized enterprises scheme, who will be specifically exempted from VAT, but the proposal or the suggestion seems to be that when such a person sells via a platform, the platform becomes responsible for the payment of VAT, even though the same service provided by the same SME, either direct, say on its own website, or through an offline agency of some description, would not be subject to VAT. So there's 6 headings, and collectively I may refer to them as the group of 6 as we go along. If you hear that term, it's those 6 categories of provider that I'm referring to. There's been discussion on the scope of services affected by this. So what type of service potentially could fall within the deemed supply model? And very simple, it could be a narrow approach, an all-encompassing approach, or something in the middle. But what you will see is that the short-term renting of accommodation, plus on-demand taxi services, for example, are covered in all of them. So even the most narrow approach would affect, as far as we're concerned, most importantly, the short-term renting of accommodation, including that to be used for holiday purposes. The middle approach, all forms of accommodation, no matter what the purpose, and all transport services, and then the all-encompassing, all services, no matter what the type of service. We don't know yet which of those it will be, but clearly, whichever approach they go for, it's going to impact upon those platforms arranging accommodation. So what actually happens in practice? Well, as I've said a couple of times, the platform becomes responsible for the payment of VAT. The renting of accommodation, for example, is deemed for this purpose to be sold or supplied by the platform. Now, as many of you at least will be aware, we have a special scheme for intermediaries and other suppliers of travel services, which we often refer to as the Tour Operators Margin Scheme, or TOMS, and it imposes VAT just on the margin of the made by the supplier. And an early thought I think we all had on this is that if the platform is the deemed supplier, it means that TOMS is the manner in which the platform accounts for VAT. But in the last few months, it's become increasingly clear that that is not the Commission's intention at all. In GFV 116, the use of TOMS by a platform is described as being evasion and being abusive. And in the most recent GFE document, number 122, which has only been published this week, uses the word prudent. It says it would be prudent to exclude deemed platform supplies from TOMS. So what does that mean? Well, I think it demonstrates that the intention here is that the platform pays the VAT that the provider would pay if that registered and complying properly with the rules in the member state of supply. So the platform needs to know certain things, first and foremost, about the status of the provider of the service, needs to understand the nature of the service, and needs to understand the rules in the member state of supply, including the rate applied in that country in order to be able to make an accurate declaration. And as I said before, in the case of an SME and indeed other perhaps non-business entities, which would ordinarily have no obligation to pay VAT, when the sale is made via a platform, an obligation under the deemed supply is imposed on the platform to pay that VAT. So to finish off, I think we can summarize and say if the platform does not act in its own name, and the provider is not in the group of 6, typically because the provider is VAT registered, there is no deemed supply, and the responsibility to pay the VAT is exactly as it is now with the provider of the service, maybe a VAT registered hotel, for example. Secondly, if the platform, again, doesn't act in its own name, so again, it's a disclosed agent, but the provider is in the group of 6, an unregistered small business, perhaps, the platform makes a deemed supply and needs to identify the nature of the supply, etc., and account for VAT accordingly. Thirdly, if the platform acts in its own name, then again, as is currently the case, TOMS applies, but subject to the normal TOMS conditions. And of course, one of the big question marks over the moment about the application of TOMS is how it applies, whether it applies at all, to a platform and any other supplier acting in own name established or located outside of the EU. So hopefully that has been a useful introduction. I've just noted there a few questions or areas that we might now address in a wider discussion. But please, everybody, do feel free to add any comments via chat, any questions which are not within that. So please fire away with your questions. But perhaps in the meantime, I can bring Bart in at this point, and Bart, perhaps you could make an introduction and outline some of the areas that you're concerned about.
Yes, thank you, David. So I guess I'm here because Expedia Group and the larger accommodation platforms have already been asked or tasked to deal with these potential issues. So last year, the OECD published a report to outline potential policy options for governments worldwide to deal with the VAT GST treatment of the gig and sharing economy, including when we talk about accommodation, short-term rentals, for instance, by private individuals. Then the Commission has undertaken a study. Unfortunately, the study has not been published yet, so it doesn't allow everybody to look into the actual depth and breadth of the underlying issues and potential solutions, also from a cost-benefit point of view. But also during the Fiscalis meeting, so there were several the last 1.5 years, we've been involved. So we have had our say as the larger platforms. The Commission has undertaken a genuine attempt to also include smaller platforms into the whole debate, but it has proven very difficult to identify them or to talk to people, I mean, more tax-versed people working for these smaller platforms. So I think one of the main concerns from the sector, from the whole platform ecosystem in the accommodation sector, which is, I mean, very big. I mean, everybody would think there's only one, well, the 3 well-known brands, but it's actually thousands of smaller platforms active in the sector who advertise their properties also on the bigger platforms. So it's not only about a handful of platforms. So that brings us to the next point, and we have a couple of discussion points here. The question is, with the deemed supplier, is that really a proportionate solution to the underlying concerns and issues the Commission or the governments want to tackle? So one of them is restoring equality between a short-term rental, which in various cases goes untaxed because it's below the VAT registration threshold, the turnover, or it's benefiting actually today already from a VAT exemption in some of the key markets. And the Commission is of the opinion that there is a lack of equality between a room in somebody's house versus a hotel room. So that is leading, that is one of the main drivers that they want to potentially tackle that issue. Another one could be to ensure VAT compliance, to tackle some VAT fraud, but I think it's fair to say in the accommodation sector, we don't see a lot of VAT fraud because either the providers are below the threshold, so there is no VAT due, or there is a VAT exemption applicable. And even then, there's a lot of other means in which they are and will tackle any remaining potential fraud in the sector because of the data sharing rules at the EC7, which David has already outlined. So I think those are a couple of the main, general concerns before going into detail, but I just wanted to set the scene. The big platforms know about this. We, of course, have more resources, but our main concern, and the reason I'm here is more to raise awareness with the smaller platforms who may not see any of this coming, and it may severely impact them to potentially having to comply with this. So I'll leave it there for now, but happy to take questions or to go into
thank you, Bart. We've actually got one question has popped up already, which is David, Bart, is there any proposal to introduce any de minimis rules on this, or is everything going to be captured?
There are thresholds for the platform itself, not for the provider. As we discussed before, no matter how small a turnover the online provider might have, these rules apply. As far as the platform itself is concerned, yes, a platform with a very low turnover might be excused the application of the deemed supply model, but the thresholds I think are going to be very low. And the threshold is the value of the transactions facilitated on the platform, not the platform's own service fee income, for example. So I think we're probably going to be talking of an annual turnover on the threshold of, well, certainly no more than 85,000 euros, but I suspect in practice far smaller than that. The most recent document, the 122 document, does have a little on this. It's just a discussion. There's no suggested rules as such, but certainly it does envisage that platforms with really very small turnovers could be excused.
Okay, I think that's answered that question. And I'm just typing a reply. Someone wants to know if this presentation is going to be available. Yes, it will be. It's available really from Monday, which is when we'll post it. It'll be on the Insight Hub of ETOA. Sorry, at etoa.org. You can see past webinars. There'll also be a link to the live recording of this. Those of you who wish to mull over what we're discussing, like a Henry James novel, it's going to be there for people who wish to see it again. Now, tell me, you've posed this question, David. I might even ask Bart, does a platform need to take payment to be caught by these rules?
Well, I think that's at this point unclear. It is not mentioned in the group on the future of VAT documents, but that is obviously what you would expect. I think so. What you need to know, since the 1st of July last year, the EU has implemented similar, what we call deemed supplier rules for goods. So tackling the big and the smaller marketplace for goods, say for instance, Amazon. And so it would only be logic that you as a platform only have to collect and remit the VAT, the underlying VAT, if you actually have access to that VAT. So if somehow you have access to the payment, but that already in itself could prove very, very complex, because you have, on the one hand, a lot of third-party payment service providers in the platform economy who take the cash as a third party and then redistribute it. Or you could have a platform who is very close to the underlying properties, right? Have another platform in between, and only have the traveler facing platform, a third platform, which is facing the travelers. And then the question is, okay, it's not because you see a property on, for instance, Expedia's website or the Vrbo website or Airbnb website, that you're really contracting and paying to, let's say, the big known accommodation platform. It may be that your booking and payment is processed into a smaller platform. So then it would only be logic that that smaller platform, who has the booking data, who knows the suppliers, if they're VAT registered or not, if they belong to the group of 6 or not, and is taking payment, that they would have to collect and remit VAT, because otherwise how can you pay VAT to government if you didn't get the payment? And then to make it even worse, if then the booking is cancelled by the traveler, and we all know late cancellation on websites, the platform then would have to refund VAT to the traveler, which it never had its hands on, or which it already had to pay to a government pre-financing that. And are a lot of cancellations. We all just went through COVID. I mean, I don't know if it's going to come back. But so that would even aggravate the whole problem. So in some of these sectors, and we would probably have to learn if this goes further from the goods marketplaces, how it was implemented there. But yeah, payment, for instance, would, in my sense, only be logic. And I think, for instance, where Canada has last year introduced or announced similar rules, I think also there you can only be the deemed supplier if you somehow have access to the payment of the booking, including the VAT or GST component.
Crikey. I mean, I think the thing you've thrown up here is that there are not hundreds, but there are many different modes of remuneration that platforms receive. They sometimes receive commission if they're acting as a true agent. Sometimes they're just marking up a net rate, which both of those are fairly straightforward in terms of how you account for it. If they are doing the deposit receipt model, or only receiving a commission when the client is paid at the end, I'm not actually sure how this would work. Because if they're just doing a commission payment, they can't account. So by which I mean it's perfectly conventional, particularly if you're distributing services for small suppliers, to take a 10% deposit, and that deposit is in fact your commission level. But that 10% deposit has got no bearing on the VAT liability of the client. Is the VAT liability restricted to that 10% commission you've received, or is it for the full payment that he's actually making to the supplier directly? And when he's making payment to the supplier directly, obviously the supplier isn't registered for VAT. The situation is really, really becomes very complex the moment you start staring at it. And the next question, the question's just arisen, which is, what exactly is acting on its own name mean for a platform? I believe, and I'm ready to be corrected by these two people, it's one of the few areas I understand a little, so I'll attempt it myself, which is just to say, acting in your own name is where you're selling a product that is your product. It's as if you're selling as a named tour operator, for example. People are buying products off you which are manifestly owned, or at least the responsibility for their delivery is owned by you. You're not acting on your own name if you are, for instance, placing a booking with a named hotel, and that people are assuming that the reservation is being made with that hotel rather than with the responsibility of a tour operator. But David, I intervened merely to have a second voice here. Would you like to correct that statement?
Well, not to correct it, but I think it's worth just thinking about what that actually means in practice. So a tour operator would normally act in its own name, i.e. the tour operator is named as the supplier of the service. Typically within the EU, it would fall within the Package Travel Directive or the equivalent in the UK. It is the contracting entity. It is selling in its own name. The platform does not apply. Platform rules do not apply. So the tour operator may well be selling in a way that it meets the platform definition, but because it is selling the services online in its own name, this deemed supply model doesn't apply. But contrast that to a situation where the platform is not selling in its own name. It is making it clear, typically through the terms and conditions, that the person purchasing the accommodation, should we say, is entering into a contract with the property owner, not with the platform itself. That's a typical disclosed agency model. So I think a good example of this would be an online agency which facilitates the booking of holiday accommodation, holiday homes. At the moment, that person would earn a commission. In many circumstances, the commission is subject to VAT, but that is the extent to which VAT really applies. Typically, the property owner is the supplier of the accommodation, and in principle is making a supply which may well be subject to VAT. But a lot of member states have exceptions, small business reliefs, which allow that owner to have no obligation to pay VAT. And of course, there are other circumstances where in theory there is a liability on the owner to pay VAT, but in reality it's not paid. But in that situation, because the platform is facilitating the supply of the accommodation on behalf of the owner, and is doing so effectively as the agent of the owner, the platform rules would kick in. That's my understanding. That seems to be the proposal. It is a means by which the VAT can be collected, which isn't collected at the moment. To pick up an earlier point, it does seem very unfair that the platform rules on this basis will impose a VAT cost where the provider is a non-entrepreneur, as I put it on the fourth point here, or a small entrepreneur. So non-entrepreneurs will probably be relatively unusual, but it could apply, for example, to a homeowner who makes the home available on a very occasional basis. That would be an example of a non-entrepreneur. So no scale in the activity that it merits the term of business, and ordinarily you would say completely outside the scope of the VAT system because they're not undertaking a taxable activity. But accommodation in those circumstances made available through a platform would be subject to the deemed supply VAT. More typically, small entrepreneurs. These are people who are undoubtedly conducting a business activity, but on a small scale. And a lot of member states have a registration threshold or similar at the moment, and any person not reaching that threshold has no obligation at all to account for VAT. Looking forward, in 2025, there will be new EU rules for small entrepreneurs, which will treat the entrepreneur as exempt from VAT up to a threshold set by the member state. And the threshold can be as high as €85,000 a year, but it will probably be lower. Let's say that a member state has a limit of €40,000. A person supplying accommodation within that member state has or will have absolutely no obligation to pay VAT until they reach €40,000 a year of turnover. but would have an obligation, or the platform rather, on its behalf, even though it's trading below the registration threshold, if the sale is made through a qualifying platform. Now, that seems grossly unfair. I don't understand why the small entrepreneur should see the value of the business reduced because the sale is made through a platform, when the same simply wouldn't apply in other circumstances. How are we doing? Have we got?
No, I think you made that really clear. I've just you've raised a number of points which we've yet really to cover here, David. And what about distribution involving 2 or more platforms? I mean, it does sound really complicated. And let's face it, there are lots of bed banks and platforms out there who are really sharing and sharing capacity at any rate, and cross-transferring stuff. And a lot of this, let's face it, is taxable, so it wouldn't apply to them. But if there are non-taxable elements being distributed around, presumably this adds a new level of complexity.
I think it does, potentially. I haven't seen anything in the papers that discusses the situation or how it should apply if you've got distribution involving 2 or more qualifying platforms. But I guess that situation will be pretty common, particularly if you accept that something like a bed bank is a platform, and I think you have to. You could have several bed banks followed by an online travel agent making the final B2C supply. So what happens in those circumstances? Logically, you might say, well, it's only the final platform, the one making the B2C supply, who has the deemed supply obligation. That is the person who, at least in most circumstances, I would think, knows the final price, i.e. the price which needs to be taxed. But of course, that final person has no link or contact with the provider itself, and therefore doesn't know whether the property owner is in fact VAT registered, or whether it falls within the group of 6. So it seems very difficult. The platforms before the final B2C supply, of course, don't know what the final sale is anyway. So I don't have an answer to how this would work. I think we just need to make, well, I know the point has been made to the Commission, but perhaps it needs to be re-emphasized that this is a real problem area.
And I think, you know, I'm also very conscious of the fact that this is going to cause considerable concern, I think you could say, to those online platforms that are outside the European Union and distributing services, for instance, in China or in North America or in South, really globally. And you're saying that this would really drive them towards being in TOMs. I mean, what are the logical problems of them doing this? I mean, the Commission has already said that they would be thoroughly unamused if people resorted to that tactic. How far they can legislate against them if the people themselves are based outside the European Union is a very interesting point. But presumably it's enormously attractive suddenly to start selling product as if it's your product, as opposed to trying to be a neutral agent on behalf of other suppliers. And do you think this is a problem? Just I was going to bounce off Bart. I mean, Bart, do you think this is an issue, or do you think this is a red herring?
Well, I think that the deemed supplier, again, it's not decided yet, but it would only apply if you deal as providers with this group of 6, right? Now, I'm a little bit concerned that some of these platforms will have a mix of some group of 6, some VAT registered. And then what do? I guess then you could react to say, I only want to continue working with VAT registered providers, because then you can get out of the deemed supplier rule. But just to highlight how complex the deemed supplier rule would make it for the platform, suddenly the deemed supplier would have to know the VAT treatment of the underlying property in all the 27 EU member states. They would need to know the VAT treatment of breakfast, of parking. They would need to deal with VAT refunds. They would have to deal with no-shows, cancellations. If there's a taxable customer booking with them or business traveler booking with them, they would potentially suddenly have to raise a VAT invoice. So none of these platforms have ever had to worry about these detailed, very complex VAT rules in the underlying countries of the EU, right? So if they suddenly would have to comply with that, they would probably say, I don't want to go there. I only want to work with VAT registered providers. Or indeed, to your point, they could say, if it's like that, I do want to become an undisclosed agent, right? And potentially only have to pay VAT on my margin, but at the standard rate. That's then pretty straightforward. Because otherwise I would have to deal and get familiar and be exposed to all these detailed rules, VAT rules, complexities, refunds, what have you. So I do think that it's probably going to be a bit of a mix of the two, or they're going to say, I stop offering EU properties because this is starting to get way too complex. Mm-hmm. And I think you will see that that's a bit the irony. What you will see, I think, the sector is professionalizing, but the small homeowners who on the side in the sharing economy want to offer a room from time to time, their life is going to be made probably pretty difficult because either they may be forced to get a VAT number under pressure of the platforms, or they're going to stop offering it because they will say, I can't advertise my property anywhere anymore, or it's getting too complex and we're all being pushed into getting VAT numbers, which then leads to the fact that maybe the VAT authorities will have to then audit more VAT numbers because, for instance, in Austria, they introduced data sharing 2 years ago for platforms, something platforms are also faced with, regardless if this now comes into place, is deemed supplier or not. And apparently what we got told, the platforms by the Austrian Ministry of Finance, was that they saw that a lot of the providers VAT registered because there was slight pressure, I guess, to do so, which in a sense is great. You could say maybe they got more revenues, but it also means a lot more work for the tax authorities to go and audit all these small homeowners. So then the question is, what do you really want to achieve? And that is what you also see at the Oecd level. You have to carefully think this through. What your overall policy objective is. Is it to gain more VAT revenues? Is it to combat fraud? Is it to facilitate compliance? Is it to restore equality? But then the question is, okay, you want to create a sort of equality between a holiday home room and a hotel room. At the same time, you're eroding with these deemed supplier the channel neutrality, right? Because depending where you sell, how you sell, there's VAT applicable or not. And then these homeowners without VAT number, their properties would be sold or rented with VAT. But since they don't have a VAT number themselves, they could not deduct VAT related to their property being rented out down the line with VAT, which is going against what we call VAT neutrality, right? If what you do is sold with VAT, you should also have a right to deduct VAT. It's a give and take. So equality then erodes some types of neutrality aspects related to VAT. So then the question remains, is this all still proportionate? Is this really serving its purpose? But yeah, we'll see. I think it will. I think it will impact multiple platforms, not to say the underlying providers, potentially business models indeed. But yeah, everybody will have to figure it out for themselves.
No, it doesn't look good. We've got a question here, which is merely, how is this related to the bus transfer taxation, where you have to calculate in each state the tax you drive through and then ask for a refund in each state. Presumably that's what the platform will be having to do. Are they right in saying this?
Conceivably, yes. It would need to be a situation in which the platform is selling that bus journey on behalf of somebody that falls within the group of 6. But you could have some sort of aggregator, i.e. not the bus operator itself, who qualifies because he's a non-EU person, not VAT registered, perhaps. And yes, I think it follows exactly in that situation, that the platform would have to split the value between the member states involved and make a deemed supply in each one.
What happens to I'm just looking at the very good questions coming through here, guys. Well done. What are your thoughts about online platforms charging marketing or facilitation service fees unrelated to your actual booking? How are they going to be captured or covered, or what is the proposal?
Shall I have a go? Bart, please
Yeah,
jump
sure,
in.
yeah, sure.
You may have more practical experience of that than me. My view is that that's not caught by this. The fee or the commission that might be charged specifically for a transaction is part of the value on which the deemed supply VAT would be paid. But the question here concerns a fee unrelated to an actual booking. And I would have thought that must be outside of the deemed supply. Now, that's not to say that the fee itself is not subject to VAT, of course, but that's a different question. A part of the platform initiative has been to consider the treatment of the platform's fees itself. We focused on the deemed supply because that seems to be the most likely part to be introduced, and it is, I think, the most important. But there could well be new rules as well on the proper VAT treatment to apply to fees charged by the platform. But certainly, if you were charging a fee to a property owner in the same member state, for example, as the platform, then I think the fee would certainly be subject to VAT now and subject to VAT still going forward.
Yeah, I think, and I hope that probably the question will come from Article 242A of the VAT Directive, and then linked to that Articles 54B and C of the VAT regulation, which kicked in last year. And there they try to say that an electronic interface, which is another concept, but I mean, in the VAT world, probably the closest you can get to the definition of a platform, that excludes, for instance, a company that is just taking payment. So, because that's probably a payment service provider, or a website that is only referring to other websites. So sort of meta search website. So potentially that could then confirm that these electronic interfaces or platforms would then not be captured by these deemed supplier rules. I just want to come back on the previous question. So foreign platforms, right, that may have to comply with these deemed supplier rules. You also have to factor in that this is going to potentially lead to a lot of double taxation, right? Because you work with a non-VAT registered property. So let's say you're an APAC platform, right? You're based in APAC and you are getting lots of people in Singapore to book over your platform, and they book via your platform EU properties. The properties are not VAT registered in the EU, so the Asia platform becomes the deemed supplier, so they will have to charge VAT on the full price. So EU VAT on the full price, probably including their facilitation fee, right? So their facilitation fee will also be subject to EU VAT, whereas then Singapore and many other jurisdictions in the meantime, I mean, talking about 100 jurisdictions globally, now we have electronically supplied services rules in place for VAT or VAT on digital services. They will say no, this is a B2C cross-border booking service paid by a Singaporeese-based traveler, and Singapore is going to say that facilitation fee is subject to Singapore VAT. And then the platform has to pay VAT twice. They have to pay VAT, EU VAT, where the property is located, plus they will have to account for Singaporeese VAT on top. And that will also and definitely impact travelers that, platforms that bring in international travelers, and I'm talking disclosed agency platforms and not TOMs, right? Because they will start to see that they get a lot of double taxation if they keep on working with non-VAT registered properties in the EU, right? And then they're going to say, well, I don't want to pay VAT on my revenues twice. That's also not fair and internationally consistent. And they will have to adapt either their business model or only work with VAT registered properties in the EU to potentially escape just double taxation, not to mention, as I said before, the whole compliance nightmare and burden they will have to be faced with. And again, bigger platforms could maybe do that. Smaller platforms would not have the resources to comply with 27 local VAT rules across the EU, let go of smaller platforms outside of the EU or even further away from all these detailed local VAT rules in the EU. So I think it is really going to impact the sector. But again, it depends how big are you, where are you located, from which countries do you bring travelers in, to what extent are you willing to stop working with non-VAT registered providers, right? There's many elements that will guide you in your decision making, but it will impact platforms in the overall sector, I'm sure.
Well, thank you. I'm very aware that we are now reaching the end of our allotted time.
Tom, sorry to interrupt, but we do have, I think, at least one question we haven't dealt with.
Oh, I do beg your pardon.
Which is the German situation. So the question is,
yeah.
Do you think that these developments make the proposed changes to Tom's application in Germany for third country-based tour operators less likely to be implemented? I would say no. It's a very interesting question. But I think the logic underpinning what Germany is intending to do and the logic of the platform rules is in fact exactly the same. It is a means of taxing services regardless of how they are sold or where they are sold, in the member state in which the service is actually consumed. That's what Germany effectively is saying, with the anticipated new rules from January next year. And it's the same logic within the platform rules. So no, I don't think these platform rules in themselves make Germany more or less likely to go ahead with what they're doing.
Yeah, no, I think I agree. I think I just want to add, because there will be, if you look at what the Group on the Future of VAT is proposing, there's going to be some sort of erosion of being able to apply TOMs, right? If you have one property which is not VAT registered in Germany, the tour operator, right, may then suddenly, in any case, no longer fall under TOMs, in any case be forced to VAT register in Germany. Right? So then you could say, well, they would have to VAT register in Germany then anyway, not because they're TOMs or non-EU TOMs, but because TOMs no longer applies because the German property didn't have a German VAT number. So in any case, you're out of TOMs. So then you have two reasons to VAT register in Germany, I guess, as a smaller platform who works a lot with non-VAT registered properties in Germany. So yeah, it will then in any case potentially lead to some platforms being forced to VAT register in TOMs in Germany, regardless of the application of TOMs non-EU or not.
Well, thank you. You've done a much better job of giving the answer, which I was going to cover in my final peroration. Gentlemen, thank you so much for taking part. I think this has been a really illuminating discussion. I've got a feeling that we're going to hear more about this going forward, and we'll certainly be revisiting it the moment they publish anything official and meaningful. I think we'll readdress this subject fairly quickly. The one lasting thought, sorry, the last thought I'll give you is that this in some ways inadvertently is an attack on SMEs. It makes them a really toxic product for any platform to start handling. At the moment they start handling a non-taxable product, they start incurring really considerable costs. And it also puts the cost up for an SME to distribute through these platforms, because it makes their product more expensive. They will have to be reduced to distributing in their own name on their own micro website. But on that micro website, of course, they can't cross-sell any other SMEs. They can only sell their own product, because were they to do so and include the farmer down the road, they're going to find they're going to be caught under this jurisdiction as well. So I don't think they mean to, the European Commission. They always call themselves champions of the small business. But in this area, they're not being helpful at all. With that thought, I'm going to leave you. Thank you very much to the panelists. Thank you very much everyone taking part. This will be available on the website. Thank you very much. Bye-bye.
Thank you.
Thank you. Cheers.
Thank you.
Okay.